The vast majority of retail crypto traders who were not interested in buying at considerably lower prices, who later FOMO'd in buying the green candles near the peak, who after staring at their computer screens for months, like this, only to eventually sell at a loss, now look at you like this anytime you mention the word crypto. The Crypto Fear and Greed Index is currently trading at 27, still within the fear category, up from 28 yesterday. The MMRI is still trading in the 250s range, currently at 252, still in the high-risk category. Crypto sentiment is still very weak, trading at 44.92 in the somewhat bearish category. The daily is starting to gain some momentum, even though it's mostly in the red. The weekly is basically sitting about the same. The monthly is still dominated by the red, and the yearly is still dominated by the red. And if we take a look at the top 1,000 cryptocurrencies by market cap, we can see that the 1 through 100 category is the only one of the 10 categories that is in the green, currently up 61.6%. But when we dial in, we can see that there's 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14 cryptocurrencies that are currently propping up the top 100 category. That's only 14% of those cryptocurrencies actually sitting in the green. But what once started out as, "Bro, have you heard the influencer said that Bitcoin's going to $1 million? What?" Which then quickly turned into this, "We gotta make a plan, bro." But unfortunately, recently has turned into people staring at the charts more like this. That seems about right. Or even being completely terrified like this. Abandoned ship. And of course, we all got that one friend who swears that Pirate Chain is going to be the biggest cryptocurrency of all time, even though we know it's likely just going to go to zero. And as always, this is not financial advice and is nothing less than the rantings and ravings of a man who, when is pumping gas in his vehicle and the nozzle automatically clicks off because the tank is full, still tries to sneak in that last gallon. Do me a favor and hit that like button before we get started really quick. I would really appreciate it. We're going to be looking at a couple of different charts today in regard to gold as well as Bitcoin that I think could potentially give us some very interesting information moving forward, as nearly each and every single one of us who looks at charts are trying to figure out exactly what we're dealing with right now. And all of us are looking for an edge. But currently we can see that the gold-silver ratio is now trading down to 58.52 right here, after breaking through this lower trend line, and is rapidly moving to the area I have talked about, which I believe would be the first stop at 50-1, which, if you're not familiar with this chart, essentially means that silver is gaining on gold. Now, first off, we're going to take a look at the Bitcoin versus gold chart. And if you're not familiar what this chart means, what this tells you is how many ounces of gold it takes to buy 1 Bitcoin, which is currently sitting at 19.33 ounces, which means that it takes that amount of gold in order to buy 1 Bitcoin. But there's some very interesting things that we can learn when taking a look at this chart. In regard to the price moving up right here, setting this high, coming down into this correction, if we take a fib level coming off of this high and this low, it gives us these fibs right here. By dialing into these fib levels, we can see that once breaking out of that area, the price traded up right here in between the 2.272 and the 2.382, topping out right here before falling into its next consolidation. And in doing so, this candle wicked through these 3 fib levels, but bounced perfectly off of the 1.786, then going on another impulsive move. If we then pull these fib levels in the same fashion we did the first set off of this high and this low, it gives us these same fib levels that we see right here. Price traded up to the exact same area between the 2.382 and the 2.272 Fibonacci, which eventually pulled back down, these same fib levels nearly perfectly, but in this case, only hitting the 1.618. We can see by dialing into this chart a little bit better that there is a nice prevailing trend line right here underneath all of this price action, which started right here on the month of November 2016. So essentially this trend line has been going for 9 years. If we take a look at this green line, which is the center line of the Gaussian channel, I call it the 50-50 line, price came down, wicked through it right here in the month of March 2020, briefly touching it and then moving to this high right here, coming back for the wave 4, then up to the wave 5 to terminate right here for the wave 5 termination. Price then fell back down into this range right here, landing exactly in those same 3 Fibonacci's that we saw in the previous patterns, this time coming down to the 1.702 perfectly, and once again touching the Gaussian channel's 50-50 line before moving up into a new impulse. So we saw it touch right here, impulse. We saw it touch right here, impulse. And if we dial into the current price action that we can see right now, we can see that it is nearing that 50-50 line once again, which subsequently also lines up nearly perfectly with the exact same 3 fib levels we've seen previously, holding this lower trend line the entire time until it broke through right here in September of 2025 and has now been trading below it for 3 months, which the month of January would be the 4th consecutive month below this lower trend line. We can see that the wave 5 termination ended right here, setting the high of this pattern during the Trump election pump in December of 2024. Since that time, the price has formed an ABC zigzag pattern to the downside, moving towards these fib levels, which are based off of this high here and this low here, the exact same way I measured all the previous patterns. The wave B termination retraced exactly to the 786 right here before starting to form the wave C, which we're currently trading in. Now, I personally find it hard to believe that we could have a 9-year trend line go on as long as we have seen this one, with the price breaking below it and not coming back up for a retest of that lower trend line. The first thing that we'll notice is these fib levels we saw right here and right here, which perfectly measured the top of both of these moves. If we then gauge this next move by that same metric, bring the fib levels up to right here, which haven't even been close to being touched. But we also have to take into account the fact that we're dealing with the law of diminishing returns, and it's ridiculous to think that it would take 151 ounces of gold to buy 1 Bitcoin. So it's likely that we will not see this area getting hit, which is likely why we saw it start to top out in this range, because it gets to a point to where it's just not feasible. But if we are going to see a retest of this upper trend line right here, which could take several months, and jumping over to the weekly chart really quick, we can see that there are several gaps and volume imbalances spaced in between this ever since hitting this B wave termination here. We also have one right here, sitting at almost exactly that 38 ounces of gold to 1 Bitcoin range, which if we come to this lower trend line right here, just to get an idea of where it sits, it's basically sitting right about here, which would be in that late March to early to mid-April timeline. We can also see that the price is trading down and has nearly bounced perfectly off of the 1.618 Fibonacci level. We also have this bullish fair value gap below these fib levels to act as the last line of support if it did break through these fib levels for whatever reason. But I think it's very likely that we could see the retest of this lower trend line, or perhaps even the 50-50 line in the Gaussian channel at a bare minimum, which at a slightly downward trajectory could put it somewhere in about that 30, perhaps 33 ounces of gold to 1 Bitcoin range. But when we currently look at the price of Bitcoin, which is trading at $87,500 range, in order for this to come back up to this range, and just to give you an idea, let's say that it stayed at 87,500. Well, in order for this to retrace up and retest this lower trend line at 38 to 1, that would require the price of gold to drop down to $2,300 in order to make this work. So either we would have to see the price of gold go down considerably, the price of Bitcoin rise considerably, or a combination of the two working together, with gold dropping and Bitcoin rising, essentially meeting at the middle to reach that 38 to 1 threshold. And if you've been thinking about trading spot, or perhaps you're just looking for a place to swap your cryptos for zero fees, use my link and sign up for BitUnex. You'll be glad that you did. But when we jump over to Bitcoin, this is also the monthly chart. When using the exact same measurement that we used on the previous chart, going off of this high right here and this low right here, we get these fib levels right here. The next high after this consolidation traded up perfectly into these fib levels, just above the 1.618 and just below the 1.702. Price then consolidated downward after setting this wave 5 termination right here, and I do have this marked as an ABC, but I'll get into that in just a minute, during which the price traded down perfectly to the 1.702, being held up by this bullish fair value gap, before breaking into this fresh 5-wave impulse right here, setting the wave 5 termination during the Trump election pump in December, nearly the same time we saw the high on the previous chart. Bitcoin is now trading within an A, B, C corrective pattern, which could either be an expanding flat, because we can clearly see that the B wave is trading up above the start of the A wave. But it could also be a running flat, which means that the C wave termination would fall short of crossing through the A wave. So there are two potential options for this flat. Either the C wave is going to fall short of the A here for a running flat, or it's going to break through it and likely extend down into this range, becoming an expanding flat. Now, when we take a look at the Bitcoin chart, we see something very similar to what we saw on the other chart. Right here, the price nearly came down and touched the 50-50 line on the Gaussian channel before going on the rest of this run, setting the wave 3 termination into the wave 4, into the wave 5 termination, consolidating down in a 5-wave move to the downside, hitting this 1.702, moving into this fresh 5-wave impulse and into the ABC that we're currently trading in. So it nearly touched the 50-50 line here, it touched the 50-50 line here, and now we can see when looking at the chart that the 50-50 line is resting right here in the same area of the 1.702, a level which was hit perfectly on the previous consolidation. But when looking at this chart, it wouldn't make sense for the price to drop down to this level, because that would bring the price of Bitcoin down. And if it did hit this level at 51,000, that would make the math that we just went over even worse, because if we divide that by the 38 in order for the Bitcoin to gold ratio to retest the lower trend line, that would require gold to drop down to a level of about $1,350 an ounce. And I think we all know that that is not going to happen in the current environment. Now we still have this wave 5 remaining on the charts that has not been completed yet, which we can clearly see right here, with the wave 1 into the 2, into the 3, into the wave 4 termination, having yet not formed this wave 5, which means it still remains. But another interesting thing to pay attention to is this prevailing channel right here. Because when looking at it, we can see that the price has been contained within this, going all the way back to here during the month of May 2022, hitting the bottom here, hitting the top for the wave 3 termination, as well as the wave 4 termination, but not even coming close for the wave B termination, which also happens to be the Bitcoin all-time high. set right here on October 6th, 2025. But when using the same metric that we used previously, it gives us these fib levels right here that are resting currently right in the range of the upper trend line of that channel, which have not even been close to getting hit, and resting within about that 174,000 to 224,000 range. Another thing to pay attention to is when we saw this rejection right here, price formed a breaker block. Price broke through the breaker block, came up, was rejected, then continued on the 5-wave impulse to the downside before hitting this 1.702. Now these two patterns are very different, although if we do label this with an ABC, which it is not, just to get an idea of what the pattern looks like compared to what we're currently seeing, we can see how they look very similar. And they both have a breaker block that is formed right in about that same area. But the main difference with these two patterns is the fact that this was a 5-wave impulse with the termination here, moving into a 5-wave impulse correction to the downside. We are not seeing the same pattern here that we were seeing here, because the wave 5 terminated right here over a year ago after the Trump election pump, moving into this ABC. Now this wave C termination remains to be seen. But we do have a breaker block in both cases. But we also have this bullish fair value gap resting at the bottom of this lower trend line, both of which could act as support, and we have not yet retested off of this breaker block for the full rejection, like we did right here. Now there's likely a very good chance that when forming this wave 5, if we did get a push up here, we could see a rejection somewhere around that 95,000 range, pushing it down into this wave 5. It certainly doesn't have to do that, but it could do that just like we saw in the previous pattern, because we still have this wave 5 remaining. But this likely isn't going to be a 5-wave impulse to the downside like we saw in the previous pattern, because this is an ABC, of which the wave C is a 5-wave move. But when we look at this pattern, it's not the cleanest wave 3, because the wave 1 and the wave 4 termination slightly intersect, which would likely mean this would be your wave 1, 2 into a wave 3 into a wave 4 for the wave 5, which would make the wave 3. So we very well could see a situation here where this wave 5 comes down here, but is actually a smaller part of a bigger wave 5, meaning we could end up seeing something more like this, with price coming back up to retest, getting rejected off of this breaker block, then coming down for a larger macro wave 5. And this rejection right here very well could break through this bullish fair value gap as well as this lower trend line, and could carry us down to this lower fib level right here, as we have seen occur on the previous iteration of this pattern right here. But if we think about this in a slightly different way, what if this wave C termination comes down into this bullish fair value gap, finishes forming by this wave 5 right here, completing near this lower trend line, which completes the ABC correction, which essentially, depending on where this fell, if it was up a little bit higher, would not take out the wave A termination, which would make it a running flat. And essentially, by being held up by this lower trend line, could move to the upside. Now, if the price of Bitcoin did bottom out here on this flat, moving into a fresh impulse to the upside, it would be very likely that we would eventually see price move up to this upper trend line. And I know these are some ridiculous prices, but if we look at the 1.618, which is currently sitting at about 174,000, assuming that the wave C did find a bottom and move upward, if we then take that number of 174,000, and if you think about it in terms of the Bitcoin to gold ratio, because Bitcoin would be rising considerably, and it's very likely that gold is not finished running at this point, which means that it's very likely to hold that 4,500 to 5,000 range, perhaps even a little bit higher. So if we saw the Bitcoin to gold ratio go up to retest that lower trend line, which could take it right around to that 38-to-1 range, if we divide this price of the 1.618 by 38, that would mean that gold would only need to be trading somewhere in the range of about $4,600 per ounce in order to make all the math work out for this, meaning that Bitcoin could bottom right here, moving into a fresh impulse to the upside, heading towards this upper trend line and this 1.618, which has yet to be hit according to the previous pattern that we've seen right here, which could explain how the Bitcoin versus gold chart could find a bottom in this area, move up to this lower trend line, and retest for what could ultimately be a rejection here, filling all of these gaps and all of these volume imbalances that we see right here, taking it up to potentially right around that 38 ounces of gold to 1 Bitcoin range. And which would make more sense when we actually jump over and take a look at the gold chart, because it also broke out of this upper trend line right here, which goes all the way back to 1980, which is in itself a 45-year trend line, which is absolutely mind-boggling to think about. Breaking out above it right here, and keep in mind this is the 3-month chart, which means over the last year we have seen gold break through this trend line and continuously move up against it. And with the current count that I have here, it shows that it could go up to this 1.618 right here in this range of about $6,370, but at some point it's likely that we're going to get a correction here. But I doubt that gold is going to weaken enough to allow it to come down and retest this upper trend line. It very well could, but under the current economic climate, I don't think it's very likely for it to come back down to that 3,000 range. But if for whatever reason it did, it would just make it easier for the Bitcoin versus gold ratio to come up and hit that 38 ounces of gold to 1 Bitcoin. If we saw Bitcoin breaking out to the upside after setting the wave 5, at the same time, we saw gold hit a local high and start to consolidate to the downside, it would double compound the momentum that we were seeing on that chart, because the price of gold would be lowering or dropping against the price of Bitcoin that was rising, which would make it easier to get to that 38-to-1 ratio. And Bitcoin wouldn't have to raise to as high of a price in order for it to retest that lower trend line right here. So I think it's very interesting to take a look at these charts. With Bitcoin pulling down and so many people calling for that 30,000 range, and with gold absolutely being on an incredible tear for quite some time, it's very possible that we could see an outcome like this. And if you've followed my work, you know that I believe at the very most we're going to see Bitcoin come down to perhaps that 50,000 range. I honestly don't even think it's going to go that low, but it very well could. But I don't believe that it's going to go back down to 30,000, as I've covered in previous videos. And I also don't think that we're going to see gold pull back to that 1,500, 2,000, 2,500 range. And I think the gold-silver ratio is going to continue to favor silver, which means I believe silver is going to continue to gain on gold, even though gold is continuing to appreciate in price. But I also believe that in terms of cryptocurrencies, that we're on the cusp of seeing an incredible turnaround, as the vast majority of cryptocurrencies like Bitcoin, like Ethereum, like XRP, and the vast majority of the ISO 222 cryptos are nearing the end of their C waves of a more than a 1-year-long correction. And I've gone over this in detail on my Patreon in videos for the Journeyman tier as well as the Master tier, which I call Cycle Variance. If you'd like more detail on this, you can easily join and watch those videos. It makes a lot more sense if you know what I've talked about in those videos. But I think we are about to see something very interesting. And keep in mind, this isn't going to happen tomorrow. It's not going to happen next month. If the Bitcoin to gold ratio is going to come up and retest this lower trend line, we likely wouldn't see that actually come to fruition till perhaps April. maybe even moving into May, but we would already start to see the signs of it moving in that direction. And like I said, it doesn't have to come up this high. It could come and hit this 50-50 line on the Gaussian channel as well. That's another area we would want to watch, which would keep it somewhere around that range of about 30 ounces of gold to 1 Bitcoin. Because we very well could see a rejection off of this as it's acted as support previously. So this is just another thing to think about, another way to take a look at what we're dealing with, and something to keep an eye on moving forward. And if you'd like even more details on these topics that I cover generally on YouTube, swing over to Patreon and check it out.